Will infrastructure expenditure make the future brighter? The 2014 budget speech coverage is brought to you by Old Mutual Corporate.
Well, good evening, everyone, and welcome to this Budget 2014 special coverage. I'm Dumisho Great. Lindsay Williams will be joining us later on today, and we'll be giving you a breakdown or a rundown of the budget wrap today. Now, earlier this evening, Nazmira Moola, economist and strategist at Investec Asset Management, spoke to various representatives from Treasury who are intricately involved in drawing up the budget for 2014. Let's take a look.
Good afternoon. I am Nazmira Moola from Investec Asset Management, and I'm here on the day of the budget with three Deputy Director Generals from the National Treasury. Starting off, we have Michael Sachs, who's acting in the post of Head of the Budget Office, followed by Ismail Momoniat, who's the Deputy Director General in charge of tax and financial policy, and lastly Thuto Shomang, who is in charge of assets and liabilities. Good afternoon, gentlemen.
Afternoon.
Thank you for joining us on this very warm afternoon. To start off with, the ministers faced quite a challenging time. How much has the macro environment influenced the budget?
Well, obviously, any budget, any fiscal program is crafted in the context of a macroeconomic environment. Since the last budget in 2013, we revised down our growth outlook quite a bit in South Africa, and we've had quite sharp exchange rate depreciation over the last 6 to 12 months. Both of those factors have obviously influenced us, but I think that what happens in the budget is continuity of much of the policy we had set out in the last medium-term budget policy statement and in the last budget. And that is one of keeping a tight rein on expenditure and relying on the return of growth to generate revenue over the medium term so that it comes back up to the level where we think it would be at its potential, which will close the deficit.
You're looking for a forecast, Michael, of 2.9% of GDP for this year. There are a lot of market commentators that are starting to think that's a little bit ambitious. Does that worry you in terms of the revenue numbers you have, or do you think growth picks up towards the end of the year?
Well, revenue has been remarkably buoyant in the last year, even despite the downward revision to GDP growth. I think, of course, the thing that really matters for revenue is nominal growth. And what we have, because of the rand depreciation, is on the one hand we've had a downward revision to the real growth rate, but on the other hand inflation has been upwardly revised, which in the short run at least we expect to keep revenue buoyant. So we don't see the type of revenue buoyancy going forward that we've seen this year, but nevertheless we are confident that we will hit our revenue targets this year as we did last year.
Well, the major sources of revenue are taxes, so let me bring Momo in at this stage. There's a comprehensive tax review going on. Judge Davies is leading this, and in the budget, the minister announced there were going to be 3 further investigations done. What are you trying to understand by these investigations?
Okay, look, they're not new investigations. When the minister set up the committee last year, he asked them in the terms of reference to look at a few areas. They prioritize the impact of the taxation system on small businesses. They're also taking an overall look at the tax system, direct versus indirect taxes. And then they were asked to look at specific areas. So they would be looking at, for example, they would be assessing the effectiveness of our tax expenditures and incentives. They would be looking at various aspects of VAT. They would be looking at mining taxes, because certainly in the time that was a big issue and something that the minister wanted to get an independent perspective from a committee of experts on issues like mining taxation.
So as individuals, should we be worrying about tax hikes next year?
It's too early to tell. No, I'm joking. I think, for tax policy, I think what government has tended to do is to, I think, not rush into making changes or negative announcements, negative in this case being adjusting upwards. I think we've tried to hold the line. Revenue take this year has been quite good compared to what we were expecting in February last year. So from, I think, all that perspective, I mean, we're not rushing to make adverse changes to the tax system. We want to do it in a considered way, look at the relevance of the tax system as a whole. And I think, as the Minister outlined, we're very mindful of the current, the impact on households currently, just with the kind of rising cost of living, the fuel tax, the price of fuel, especially given the depreciating rand and so on. So it's something that we do take into account.
Okay. Well, the deficit numbers that have been forecast for this year and next year are slightly lower than were forecast in October, which, Thuto, I'm sure is good news for you, because it means you have to raise less funding in the capital markets. But it's still quite ambitious. So you're still looking at funding 132 billion rands in the financial year that starts 1st April. And the last couple of years, foreign investors have been a big source of that, and they seem less interested nowadays. Is that something you're worried about? Where do you think the funding is going to come from?
Well, I mean, we welcome the fact that the deficit numbers are 4 billion less compared to what we presented at the time of when we presented in October. And over and above that, the current funding plan indicates that we are likely to raise 5 billion more than what we had planned. So we are starting the next financial year with more cash than we had planned for. This augurs well for our funding next year. What we have seen in the last couple of years, yes, non-residents continue to buy, we're supporting our bond auction on a weekly basis as a result of the capital inflows. What we are likely to see with the tapering talks since last April is that non-residents tended to sell our bonds, and there's been a price adjustment. So the price have moved higher, and given that the price have moved higher, we have seen the local investors coming and supporting our bond auction. So we think that there is enough liquidity and depth in our domestic market for the domestic guys to take or to replace the non-residents.
Okay, so Michael, do you think enough's been done to ward off the threat of ratings downgrades?
I think that our medium to long-term fiscal position is sustainable. We've demonstrated commitment to rein in expenditure. Over the last few years, our expenditure path has been at or below our expenditure projections. We've Also put in place a lot of measures to contain wasteful expenditure within government. And our expenditure is growing at a much slower rate than our revenue. And all of this in an election year. So it bodes very well for the future path of fiscal policy. And I certainly think that the concerns ratings agencies have are more about the long-term development of the economy. But looking at the fiscal numbers, there's nothing really there that would warrant concern about ratings in the near future.
One of the things in the long-term development is increasing the labour absorption rate and improving youth employment in particular. So we saw the Minister talk about the employment tax incentive, but going through the budget, there's only R1 billion that's been budgeted for this. Momo, do you think that's enough?
Look, remember that it's a tax incentive, so the actual, so it's not like a budgeted allocation. If the take-up is higher, it's revenue foregone, and we think we could manage that to some extent. In fact, if you look at the take-up just for January, we estimate that it's been taken up for at least 56,000 young people, which already suggests that we're going to exceed the 1 billion per month. It's early to tell, but I suspect that the take-up is going to be quite significant, and the 1 billion is not by itself a constraint, a legal constraint. If it exceeds that, it exceeds that, and we'll have to just manage on the revenue side, because it's, as I said, lost revenues.
But 56,000 new jobs it's good news. Is there a concern that this may be taking away from people, so offsetting jobs that would otherwise have been created anyway, or maybe pushing older workers out of work?
Look, we think that in getting the legislation through Parliament, we really tried to take those concerns into account. There are pretty strong penalties and sanctions that apply if there is evidence for displacement. And to the extent that there are abuses, like there is with any incentive, I think we would hope that the unions will help us identify such abuses so we could deal with it.
One of the major sources of job creation from the government side is the state-owned enterprises going forward. Their expected capital expenditures being slightly behind expectations in the last couple of years. Thuto, how do you see that going forward?
Look, we expect that the state-owned companies will continue to implement the infrastructure program as outlined in the NDP and in the government programs. There has been some teething problems, and I think that we are working on those challenges to make sure that the infrastructure spending continues. Whilst when state-owned entities spend, it's expected that they will make a contribution towards job creation. Part of the infrastructure that they're building is not meant to create jobs, but is to enable and to unblock the bottlenecks in the economy to allow the private sector to play a meaningful role. So we think that the current infrastructure spending is realistic, and we should be able to achieve.
And the big bugbear on infrastructure financing has been the South African National Roads Agency in the last couple of years. We've seen e-tolling implemented in December. What are your indications on the take-up of that? Are you comfortable they're going to be able to finance their debt, or are you, as the Treasury, going to have to subsidise their debt again at some point?
The feedback that we have received from SANRAL over the last 2 months of implementation has been positive in terms of the number of users who have subscribed or bought the e-tax. And we think that over time they'll continue to enforce and making sure that more users get into the buy e-tax and are able to raise revenue. The revenue that they raised in the first 2 months, given what they had expected, it was slightly higher than what they had expected. And we think that they should be able to implement the program and be able to receive the revenue from tolling and be able to repay the debt that they've accumulated over many years.
Turning from the roads to the financial industry, there was mention of the tax-preferred savings accounts. Remember, how exactly would this work? Is it a tax-free contribution to a savings account, or is it just the growth in the money put in is tax-free? And when would this be implemented?
Okay, look, it's just the growth. So it's from your after-tax income you would put in, and you can have 30,000 rands per year with a lifetime limit of 500,000 rands. The idea is obviously to have a product that's over and above just your retirement savings product, which are already incentivized, as you know, in terms of your contributions and your growth. So this is in addition to that, and it hopefully would also be aimed at the lower income market. In terms of implementation date, we intend to introduce the legislation this year. So as soon as the legislation is passed, we'd be able to determine then when it would actually take effect. We're hoping it would be this year if the legislation gets through early now.
Okay, well, let's hope. Looking at the health sector, the Minister talked about national health and how the combination of lowering private sector costs and improving the public sector was necessary. How are those public sector initiatives going? Michael?
They're going quite well. We've allocated a large amount of money for pilot programs in 10 districts across the country. In the current budget, we haven't ramped them up as fast as we would have liked, but we see them proceeding and ramping up in the next few years.
So when does that, if they've taken a little bit longer than expected, does that mean the implementation of NHI on a more widespread basis is also getting pushed out a little bit?
I don't think so. As Minister also mentioned, there's a white paper and a financing paper that need to go to Cabinet and will go to Cabinet shortly. The process will proceed thereafter.
So to finish off, I think everyone is interested to know how much of a role did the election play in the formulation of the budget? How much does the political influence meet with the macro influence?
I think that we've shown that we're quite exemplary. We've stuck to the targets that we outlined in the MTBPS. I don't think that anybody could say there's real signs of just pure electioneering. I think more importantly for us, it's to focus on the service delivery issues and to actually address funds towards those sorts of areas.
Anything else to add, Michael Thuto?
From the funding, we have announced this a few years ago that we are exploring option to issue as a cook, so it has nothing to do with politics. So
just wanted to get it in.
No, so we are looking forward to tapping a different market and assessing the appetite for South Africa as a credit.